Welcome back. Well, we talk about, a variety of businesses all day long. Let's now talk about the business of media itself. It's my pleasure to welcome in Rahul Joshi, Managing Director at Network18. Rahul, great to have you with us here.
Thank you, Prashant.
Thank you very much. And it was a tough quarter, but I think revenues are up about 7% or so. So why don't you lay it out for us in terms of how the quarter panned out, what were the pulls and pushes, and we'll dive deeper.
No, I think, Prashant, the first 2 quarters of this year have been very challenging. I think it's one of the toughest years that I have seen in the business, if you leave aside the COVID year. I think, there has been a little bit of a slowdown in the economy. And I think the advertising market in particular has been really soft. Even in this quarter, advertising volumes have been down. So I think a 7% growth, in high single digit, it gives me a great amount of satisfaction that the team has really worked hard and pulled its load. I think a few things that have really helped in this. One is that I think as a news network today, we have a 14.2% share. It's at an all-time high. To put it in perspective, it is more than the combined share of maybe the next 2 or 3 players. Okay. At least the listed players like India Today Group, Z, all these, so we are at a commanding position in terms of reach. In terms of market share, you are well aware that, we are number 1 in CNBC, our flagship channel. CNN News 18 has been number 1 for over 3 years. Same is the case with News 18 India. In regional, we are number 1 in many of the flagship brands, including, News 18, Lokmat, and so on. So that has given us the pricing power over the last few years. So even though the advertising volumes may have been low, the pricing power has, taken us has seen this growth of 7%. On the other hand, it's not only a reliance on advertising, but on reliance on subscription revenue and new sources of revenue that we are constantly looking at. So, if you look at money control, it has, till about 4 years ago, 100% of the revenues were advertising. Today, it's 70-30. 30% is from non-advertising revenue. It is subscription. Money Control Pro has 1 million subscribers. Money Control Super Pro, which was launched 3-4 months ago, has, really opened well for us. I'm still not disclosing the numbers, but, we are not selling for less than 2,500 rupees per annum. So that's been a really, great, Pro by contrast was just 999. And the ARPU is lower, obviously, because we've given some, festival offers, etc. So I think this subscription revenue is another piece that has opened up. Now, in Money Control, we've also got into lending. That's the third leg, another revenue stream that's opened up. We've now, we've created something called Creator 18. So we've onboarded 40 creators, exclusively, and we represent them in the market. And through them, we reach about 125 million MAUs. Now, this is another offering that we take to the client. So, it is a force multiplier to our business. So that's the other. So we've been able to look at this business very differently, focus on news adjacencies, non-news businesses, which are content related, but not necessarily hardcore news as you and I understand it.
Absolutely. I think that sets it up very, very well. On the Creator 18, how does the business model work? Do you get a share of the content or, the revenues that those creators make, and do you enable them in ways?
So, it is an industry first kind of phenomenon. We were the first to sort of quickly jump in and realize that, we need to create this collective and, get on board creators who are creating. And this has nothing to only do with news. News our journalists are creating. They are the creators themselves. But, this is to get into other areas like fashion, lifestyle, food, art, culture. Because we also have a global brand like First Post, we are also onboarding some creators who are global creators, right? So we get them, and we get them on our platform. They get another platform, to use, and we get their reach. We represent them in the market. We go and pitch for business for them. We take our business to clients and offer this additional service of, 40 creators who are exclusive to us, and many more who we work with non-exclusively from time to time. In the last 6 months, we've done 300 campaigns, with them, not necessarily on our channels alone, but everywhere, on social platforms and where. So we bring in the managerial expertise, we bring in the marketing, the branding, the sales expertise, and we let those creators use our platforms. We take our creators, we get their platform and their visibility as well for our brands.
And if, this is going to get as disaggregated as you've been saying it will, the content as a business, I think that's perhaps the right strategy, right?
Absolutely. See, we have to look ourselves as a content powerhouse, as a content factory. We take our content to where the audiences are. If the audiences are on social, we take them there. Today, a lot of our children, kids, youngsters, teenagers, they live on social media. Right? They wake up with social media, they go to bed with social media. So they consume their news on social media, they consume all their content on social media. So we've got to be there. We have to think differently and appeal to the Gen Z as we go along.
Just to take you back to advertising, you said a lot of course, the conversation has been about non-advertising, but the advertising pie itself, I mean, I actually jokingly in the newsroom when I'm here anchoring, I look at ads and I say, well, that's a new one. That's a new one. There's a lot of new stuff across industries. And as they say, media is essentially at the end of the day a reflection of how the economy is doing in terms of advertising. So, I mean, I'm seeing a lot of it.
No, I think what what the government has been able to do is quite commendable. They've cut income tax rates in the last budget, and now, with this GST rationalization, I think there is money in the hands of people. So they are spending that money now. I think that, we're seeing the green shoots now. See, if you look at the auto sales in the last month, I mean, they have been, so people were holding, after the announcement of GST rationalization till it kicked in on the 22nd, people were probably holding back. But after that, it has really taken off. So I do think that there are green shoots that are visible. The next 2 quarters should look up if the trend continues. Of course, there are large macro factors also at play, but if they are all to resolve themselves, I think the next 2 quarters do look good for the industry.
Do you I mean, what is the share of advertising now for the group as such, for shareholders of Network 18? I mean, what would be advertising now?
As a percentage of
revenues,
non-advertising, total revenue, the breakup.
Revenues, yes.
So we don't provide the exact breakup, but suffice to say, I was giving the example of money control that till 4 years ago, 100% advertising, today 70-30. Right, 30 years from non-advertising, subscription, lending, etc. But if you look at, we also get a lot of subscription income from on our television business. So that also pretty much follows the same sort of pattern. But going forward, I do think that, we have to press on the, get on to, non-advertising revenues also in a big way. Advertising will grow for us because we are in a leadership position, because news will continue to grow. But I think news adjacencies will grow too, and I think we should look at subscription as a way to grow in the future. And in places like money control, we have to also look at transactions. So lending is our first foray there, doing reasonably well. We hope we can accelerate there as well. It's for the last, actually more than 1 year, actually since President Trump took over, it's been a very, I mean, global has been such an important part of the content conversation here in India as well, with all that is happening. And I think we have a first post, I mean, I think as an offering, which addresses that. I think you've been trying to build up Prime, CNBC Prime as well. So, if you look at that, so with First Post and CNBC, these are two important legs of our, CNBC is really the flagship of the, of the entire group, Network 18. It continues to grow. We have, with CNBC, CNBC-TV18.com has been doing a very healthy growth over the last 3 years. Combined, the brand is growing. I think what we have done with CNBC is to even look at the top slice of the market, the most premium end. With CNBC Prime, we hope to get there. CNBC Prime is global news for the Indian audience. So you pretty much wake up with Japan markets and, you end with the US, New York. So you pretty much make sense of global markets because today they are all interlinked, right? I mean, Indian markets do feel the impact of what is happening globally. So that's CNBC Prime. And along with CNBC-TV18.com, like Money Control started Money Control Pro and Super Pro, we've started CNBC Access. Now, Access is creating experiences for people. It's priced at 5,000 rupees per annum. So it's highly priced. And in the last few months, we've had a lot of subscribers who are looking at those experiences. And those experiences are events, campaigns, interaction with our anchors. We have events, special shows for them, slightly some shows that are behind the paywall, so that's what Access is doing. On First Post, it is one of the fastest growing global brands in the world. We compete with BBC, Al Jazeera. Our ambition is to make it, a global brand out of India. And I think you will see over the next year, we are significantly increasing the number of hours of content, global content, done by global editors and global anchors. You'll see that happen over the next 6 months to a year. I think advertising is one big leg of the revenue, this revenue leg. The other is, we get YouTube revenues. And we will also, in time to come, open up subscription here. Because I think for good global content, I think there is money to be made here.
Okay. On the lending side, I think there's a partnership with HDFC Bank. Could you just talk to us a little bit about what the roadmap is? What's the direction of travel for this business?
So lending again is something that we started about 18 months ago. We thought that we have so many users on our platform. How can we make the most of it? How can we make them engage with the brand on an ongoing basis?
Sure.
So they come in for news. We have a large funnel, 100 million users come in every year through the funnel of news, through the funnel of tools. We built a lot of tools, to help investors invest in the markets,
Sure.
Traders make sense of the markets. How do we use this, to take our revenues forward? So we thought that it is a good idea to get into fixed deposits and lending. There is no default risk on our balance sheet here. We are just the pass-through. We get a commission. And I think HDFC is one big partnership that we have entered into this year. We announced it at the GFF recently. We also have many more lenders on, who we've been doing business with over the last 18 months. But I do think that HDFC, we have to watch this space. I think it will really give us that big kicker.
Because the audiences are there. You have to convert it.
That is right.
In terms of
Yes, you have to convert the right audiences who are capable of taking a loan. If you can give it the right audiences to these guys and convert them into business, I think there is commission for us also at the end of it.
And do you think it perhaps becomes a non-negligible part of the sort of overall pie?
Yes, I definitely think so. Okay. I do think that, as I said, it's 70-30 for money control. I do hope that, we are able to increase the non-advertising part of the business substantially over the years.
Rahul, to all CEOs who come here, we ask them the question about the guidance. Any guidance you'd like to provide for the business as you look ahead into, the second half and goes beyond?
As I said I just said a little while ago, I think the second half looks promising. For the news businesses and for businesses such as ours, the quarter 3 and quarter 4 are always bigger than quarter 1 and quarter 2. Because last quarter we burn a lot of our revenues on events, on campaigns. Some of our big properties all play out in the last quarter. There is a budget that is coming up. There is a Bihar election in this quarter, though, for a large organization like us, it's a small uptick. So I think there is excitement in the next this quarter and the next. Let's keep our fingers crossed. Nobody can predict the larger global macro environment factors, but if they all play out as expected, I think we should be seeing a better 2 quarters in the coming.
Hopefully, some amount of repair and recovery with regards to US India as well, sooner rather than later. So I think all of it adds up.
Yes,
in terms of
absolutely,
sentiment, which is so important.
It has to come together for us to be able to do well.
Rahul, really great having you with us here and getting us a blueprint roadmap for the business at Network 18. Thank you very much.
Thank you, Prashant.
Thank you. Well, I think we'll slip into a quick commercial break here. We're going to come back. Ekta, Winnie back in the studios. They'll take you through more on market, stock-specific action in just a bit.